Good morning, everyone. Thank you so much for attending this morning's presentation on responding financially to COVID-19 and more with Ross Dietrich. He is the managing partner at Price Kong. He is the accounting firm that has been working with AWCI-AZ for 3 years. They've been absolutely phenomenal. They donate an ungodly amount of their time and effort and resources to ensuring that associations like ours and companies in the construction industry are not only managed well financially, but that they are prepared for things that come down the pike. So we are very thankful and very fortunate to have Ross join us this morning. I know it's been very, very busy for you, Ross, with everything that's been going on. How's it been going for you?
Oh, it's definitely been busy. Everybody's asking questions, and even though much of the economy shut down, our clients were even more needy because they wanted to know what they were supposed to do. So that's kind of what prompted this whole thing.
Well, I can completely appreciate that. I know we've not only heard a lot from our members, but from my clients on some challenges. So we're, again, very appreciative of your time. So I will go ahead and take a step back and allow you to take your time. And as we continue on with the presentation, and as we kind of discover things that are coming in through here, please be please be aware that the questions that we have for during the presentation will be answered at the end of the presentation. So please just use the Q&A function that is at the bottom of your screen, and we will go ahead and get going. So Ross Dietrich, thank you so much for your time.
All right. Well, everything I'm about to say is just half-truths. I'm kidding, but we're going to talk about the PPP program, and that changes daily. I think everybody probably sees it in the news. And a lot of what I'm going to tell you today is my take, my position. I'll give you some examples of what we've done as a firm, what I've seen some clients do, and hopefully everybody gets a little piece of something that's going to help them through this. So I'm just going to jump in. And today's objectives, I want to talk about COVID-19, and I saw today that our numbers were less than 1,800 when there were 3,500 new cases yesterday, so maybe we're going in the right direction. Talk about the PPP program. We're going to spend a lot of time talking about that and what we know, what we don't know, how it should work. And then I want to spend some time that hopefully will give you some good tips on how you can manage cash flows through all of this nonsense. And tying into that is managing the workforce and then just preventing fraud. So let's start with COVID-19, the current status of the pandemic. Right? When I put these slides together, I actually thought we were kind of on the back end of it, but all of us in Arizona today know that we're the epicenter. Actually, I think Florida had 5,000 cases a day. I think that what I've had to do as managing partner of our firm, we're 50 people, is something very important is we need to remember that everybody is seeing this differently and through a different lens. And some people are reacting to this pandemic one way, sometimes it's fear. Some people are in denial. Some people think it's a hoax, and I don't know who's right. But what we got to know is however they feel is right. And unfortunately, we have to address everybody's concerns differently. One of the gentlemen who worked for us when this started, he told me he thought 2 million people were going to die. When he told me that, then I got some real insight into what his brain was saying and how I needed to figure out how to help him through this. He's come off of that a little bit now. And then I've got a couple of partners who are old school, and they haven't missed a day out of the office. When this all started, I remember distinctly when the NBA shut down, and I thought that would never happen. And then within 10 days, we shut down as a state. And even though we were listed as a essential business, like most of you would have been, one of those requirements was if you can work remotely, you need to work remotely. That's what the governor said. So I told the firm, we need to work remotely. Nobody did it. Everybody wanted to be here. It was still tax season. They hadn't extended the tax deadline yet. And so 2 days later, I called people in a room, less than 10 people at a time, and said, okay, at 4 o'clock today, everybody's going to go home. We've got our tech company ready to help you. You need to make sure you can work remotely. And they did it. And then we said, okay, we want you to work remotely if you can. And no one did it on their own. So then we had to force the issue. And the thing about it is health and safety must be your first priority, no matter what it is. And yes, we're all in business to make money, but you have to, and sometimes you have to find ways. You have to find ways to make it work. What we found actually was that many of our people were more productive working at home because we told them, if you're going to charge me for 8 hours a day, I want 7 of it to be chargeable to clients. When they're in the office, they're having meetings and they're they're gossiping, they're socializing, which is all fine. But man, it sure made a difference. And what I mentioned about how everybody sees this from a different lens, it's really, really important to think about the morale of your team, of your employees. And we've got another group of people who can't really work remotely. And I've been informed now that they're concerned about their health and safety. I'm not sure what we can do about it, but one thing I do know is we have to listen to what their concerns are, and we're going to have to address them. And if we can't do anything about it, we're not going to be able to allow you to work from home. And here's the reason why. It's a lot of communication needs to happen. And I tell you that I've got a couple people here that ask me when they're going to get their weekly or bi-weekly update on COVID. They say it tongue in cheek, but it's real. And then legal concerns. And I think that we don't know where this ends up, but if you should have or could have done something to protect your team and you didn't do it, are you at risk? And I don't know the answer. I'm not a lawyer, and I think that you probably are at some level. We'll see how this goes in the courts when this happens, because it's going to happen. I'm a Michigan fan. I went to Michigan, so I hate mentioning Ohio State, but I saw that Ohio State made all their football players coming back sign a waiver saying they wouldn't sue them if they got COVID. I don't know if it's enforceable, but it's something that everybody has to be concerned about. The whole point of this presentation is to talk about how you financially navigate through this nonsense that we're in, and that's one of the things you've got to be aware of. And then, how have you pivoted your business? I deal with a lot of contractors. I think Amy mentioned that before, and some of them, residential remodel people, early on, people told them, I don't want you in my house. And we had somebody at our house not long ago, and they asked me if I wanted them to wear booties on their shoes, and if they wanted to wear a mask. And perhaps you've had to take your business and go in a different direction for a few months. And instead of doing project type A, you had to do a project type B. And what else did you learn about your business when you did this? Did you find out that half of your administrative people can work remotely? They can work in their pajamas. There's a plumber's commercial that's on TV, and I always think it's funny because the girl that's answering the phone, they said, oh, they might be working in their pajamas. You'll never know. I think that's the new reality for us all is how do we do this differently on the other end of this, and how are we doing differently now? And then the other question I have is, do you need to pivot that again? We've done that. I told you that we sent everybody home and told them they needed to work from home. We had less than 10 people out of the 50 in the building. And then when things got better and you got rid of the stay-home orders, we told people, well, you can come back in the building, but let's keep it at 50% of the people. Next thing I know, everybody's in the building again, and the numbers spike. So I sent everybody home again last week. I told them you have to work from home on these days because they're just not going to do it. How do you pivot? Did you pivot, and do you need to pivot again? That's something you need to think about. So let's talk about the Paycheck Protection Program, the PPP. It's really interesting when I've had conversations with clients, with my partners. I think it's important for us to understand what the government's intent was. And I remember President Trump saying that there were a whole lot of hardworking Americans who lost their jobs during this by no fault of their own, and he wanted to make sure that they got paychecks and that they could feed their families. I thought that was a very poignant comment that he made, and this is why it was there. Had a conversation with somebody, and they said, well, I've got a PPP loan, but why would I pay somebody for not working? If I can't have them come in and do anything, why would I pay them? And I said, well, that was the whole point of this, was to make sure everybody still got a paycheck, whether or not they were being productive or not. I think that people that are smart, I think restaurants is maybe a little more difficult, but there's always a way. Like I said, you might have to pivot. And like our administrative team, we made them work from home, and most of what they do kind of needs to be done in the office. What we did was we found other things for them to do from home that they didn't need to be here for, and it was very productive. And we got some stuff done that may not have gotten done for months from now, but still need to be done. And so sometimes you just have to figure that out. Let's talk about the current status of the Paycheck Protection Program. There's still funds available, and I'm just going to put all these in here. There's funds available, and I know several banks actually that are still offering these loans. If you haven't applied for one, you have until June 30th, which is just next week, and it's still there. And if you qualify, and you haven't asked for it, then you can. If you were on the fence about it because you weren't sure if you're going to be able to pay people or they're going to have jobs, the fact that they've extended the payment terms of this until December should give you a little more grace period and have the opportunity to pay people and to bring people back. So if you haven't applied and you think you can and should apply, if you reach out to me via email, I can connect you with 2 or 3 banks who are still offering these loans, and get applied before next week. It doesn't take long to apply. You call them, they'll help you. And then the needs test. So when this all happened, and we all recognized that Congress and the government did this stuff on very quickly within a few days, and generally when the government does something and it takes them 2 years to do it, it doesn't go off very well. When they do something in 3 or 4 days, I actually think it may have gone better than had they spent 2 years doing it. But there was a lot of questions and a lot of uncertainty. And one of the questions that came about was, do you have to have needed the loan? Could you have kept working? For instance, our firm, we didn't have to shut down. We weren't a restaurant. We didn't have to send everybody home. We still were getting revenue. We absolutely were getting revenue. When I look at it though, I'm really concerned about my 3rd and 4th quarter. We have about 25% of our business is doctors and dentists. And those folks had to shut their doors. I'm not sure they're going to be able to pay their bill in September, October, November, December. And man, we spent a lot of time helping them through all this, helping them manage their business, helping them manage the PPP, talk to the SBA. So do I have a need? I think we do have a need. I'm not sure what that is. So when this was going down, everybody's, they're in the news, the big companies, they apply for the LA Lakers. So all of you Suns fans, another reason to hate the Lakers. The LA Lakers got money and they sent it back because of social pressure. They probably didn't need it. And then there was a conversation about if you didn't have the availability to get funds from somewhere else, what exactly does that mean? So I think a lot of people were very nervous on the front end of this about, if I take this money, am I acting in good faith? So they did issue a lot of guidance. They issue new guidance, seems like every day the SBA does. But the needs test only applies to loans in excess of $2 million. So if your loan was less than $2 million, it's going to automatically be assumed that you needed that you had a need for it, and that's not going to be a question when you ask for forgiveness. Excuse me. The next part of the slide set talks about there's some banks that aren't offering anymore, but there still are more. Consider online financial providers such as PayPal. I would rather you call me and get some contacts at bankers I know that are still doing it in smaller banks than to use PayPal, but that is an option if you have a relationship there. And there we go. So it's constantly evolving, and I think I mentioned it a minute ago. There was an update today that I saw. I didn't even get a chance to read it this morning, but it changes every single day. It seems like it's changed every day since they announced it. Who qualified, how much it would be, then they upped it. It was all spent in a couple of days, and then they redid it, but there's still money left. And then the most recent modifications were, at first you had 8 weeks from the time you got the loan to pay those appropriate expenses in order for it to be forgiven. And they've extended that to 24 weeks or December 31st, whichever is the sooner, which is really, really positive, because what that did was, especially like a restaurant, for example, they may have had to shut their doors almost completely, and then they could start bringing people back slowly. It gives them a little more time to make those appropriate payments. And then originally, of whatever money you borrowed, 75% of it had to be spent on payroll, and 25% could be used for other things like rent and things like that. They reduced that 75% to 60% in the most recent modification. That's going to help most people that were on the edge of, well, I've paid all the payroll. And the reason why it became tricky was the loan amount was basically 2.5 months of your payroll is what it was calculated at. And then the rules said you had to spend that money in 8 weeks, which is only 2 months. That's where the numbers got a little messy, but this reducing it to 60% had to be on payroll and related probably helps most people meet that threshold when they're asking for forgiveness. The list of non-eligible payroll expenses for forgiveness was not changed. They didn't change the rules on any of that. They also gave you more time to rehire and reinstate and any salary, wages, or cut people. We're going to talk about how this gets looked at to be forgiven, and one of the criteria is full-time equivalents, meaning how many people did you have on the payroll then, and did you keep them on the payroll? If you cut your people, then you're going to have an issue with forgiveness. Or if you cut people's wages by 25% or more, just keeping them on the books but not paying them wasn't going to cut it. They extended the time to rehire those people and reinstate your FTEs to December 31st, or that 24-week period as well. So that's going to help people, especially back to the restaurant example, where they had to let everybody go and brought some of them back a little bit at a time. It would have been really hard for them to meet that full-time equivalent threshold. But once they've back full steam here, hopefully in the next few weeks, then that shouldn't be a problem. So there's the rehire date to December 31st. And that FTE headcount penalty won't apply if you can provide documentation that you were unable to rehire that person or unable to hire similar qualified people. And that got put in place because there were a lot of folks in our country that were making more money on the new unemployment with the extra $600 than they were working full-time. And so I've had clients and several people talk about how when they were open for business again, they asked for people to come back and they declined because they were making more money not working. And if you're unable to return to the same level of business activity due to compliance with federal guidelines, then there's some leeway in there. A great example of that would be, I think that this might actually apply to restaurants. In the states, and our governor didn't do it, but there were several states that opened up and said at first restaurants can open at 25% capacity, then 50%. Our governor told us to open and make sure that we're social distancing. I've been in restaurants where every other table's blocked off. I was in a restaurant this morning having breakfast, and there wasn't a single table that had moved from before all this. I don't know how many people, there weren't that many people. It was 6:30 this morning. But I don't know how many people they're putting in there or if they're limiting it. But there's a great example. If the government said that you can only have 50% occupancy, obviously you don't need to hire all your people back. So there's some leniency there. They eliminated the provision that made the PPP loan recipients ineligible to defer payroll tax payments. That went away. If you could defer payroll tax payments in the case that you needed to. The other big question that happened with a lot of our clients, and we actually had that question here, is do you need to put the PPP proceeds in a separate bank account? And the answer is unequivocally no. Money's fungible, which means if I have $1 in this account and I have $1 in this other account, those dollars are exactly the same. I can swap those dollars. I can do whatever I want with those dollars. It's the same. So my advice was that no, you don't need to put this money in a separate account. Use that money to keep operations moving. But what was key was the next piece here, where I told clients you have to be able to show that you spent the loan money, the money you got on these loans, on eligible expenses during the covered period. And I told all of them, just create a spreadsheet and track the expenses and payments. What we did here was said, okay, our loan was on this date, and from that day forward, here's what we paid in payroll on this pay date, and there's supporting documentation on it, the payroll records, and it will also agree to our general ledger. And if you track those and you can prove those, then you shouldn't have any issue. It didn't matter what bank account that cash went into. So that's the short answer to a question a lot of people struggled with was, oh, I've been told I need to put this in a separate account. And I'm not just saying that because of my opinion. I had 3 different banker friends of mine tell me the same thing, and they're the guys that you need to worry about. So there's that. And so the next step is we're going to apply for forgiveness on these PPP loans. And the question is, do you know who's going to determine that? I've asked that question to people, and always think it's the SBA. I've had a couple people tell me the IRS was going to do it. And the answer is actually the bank who lent you the money is the person that's going to be charged with the responsibility of determining whether or not this loan is forgiven. And again, I've spoken to several lenders, and they've been given very little guidance on this process. I know in the past few days, the SBA issued a loan forgiveness application. I read it several times. I actually looked at it again yesterday in preparation of this presentation, and I generally think I'm a pretty smart guy, and I was very confused on some of it. Again, I think that the government turned this thing around very quickly, and there's probably some holes in it. But regardless of that, the big deal is that you're going to work with the lender, the bank, who gave you this money, to talk to them about whether or not it's forgiven. And they're going to struggle with some at first, but I think that there'll be more guidance from the SBA coming very soon. And I still stand behind, if you spent the money for what you were supposed to spend the money on, and you can prove it, you can document it, there shouldn't be an issue. So again, are you required to show a need? And we talked about that. If the loan was under $2 million, there's a safe harbor provision that says if you're under $2 million in that loan, you obviously had a need. If you're over the $2 million, you might have to prove that you had a need. And then the FTE considerations, what is the measurement period? So again, in preparation of this, I was reading that application for forgiveness yesterday, and it looks to me like there's, and I'm sorry, I don't remember the dates, but February something through March 15th or 18th or whatever it is, however many full-time equivalents you had. FTE is full-time equivalents, by the way. If you have two part-time people, they would end up being 2 FTEs if they both work 20 hours a week, or it ended up being 1 if you combine them together. So there's a calculation there. But if you had a number of employees on that measurement period, when you paid this money out in the measurement period to ask for forgiveness, did you have the same number of FTEs or more? That's the question. Again, I wish I was emphatic about what those dates are, but I'm not. This is still a work in process. And then, when should you apply for forgiveness? The article I saw this morning said, that people who receive PPP loans were eligible to ask for forgiveness early. So I think that means even if your 8 weeks hasn't passed and you spent that money, you could ask for forgiveness. I didn't have a lot of time to read that article in full. I'm going to read it later today. But for me, the real question is, when should you apply for forgiveness? I believe that once you've spent that money for the appropriate purpose, I think that you're eligible to apply for forgiveness. And you very well may want to do that early. You might want to do that when you can prove it. If, let's say your loan was for $100,000 and you spent $200,000 in that 8-week period, or just decide it's a 24-week period, you've well covered it, then I think it's okay to ask for forgiveness. And again, I'm not sure that the lenders are ready to do that yet. And with the new stuff that's come out from the SBA this week, I have several calls later this week with some of my banking contacts to find out where they stand on that. I wish I had a better update for you, but I would tell you that if you got a PPP loan and you're ready to ask for forgiveness, call the banker who lent you that money and ask them what they want to do, when they want to do it, and what they're going to need you to provide to them. And so that's what it is. Start a dialogue now with that lender to find out what's going on and what their methodology is. Because again, the SBA is giving little guidance to these lenders, and they're the ones that are going to decide whether this loan is forgiven. And is it going to be a taxable event? So this is a difficult question. And the answer is, I don't think so. And the reason I'm not certain about it is this. The act of getting the loan is not a taxable event in itself. If you took that money and you spent it on payroll and the appropriate expenses and the loan's forgiven, that is not a taxable event in itself either. So in the true sense where you had somebody who wasn't producing income and you paid them anyway, it clearly is never going to be a taxable event. They didn't produce any revenue. You paid expenses with money that wasn't yours, that they gave to you, and it's not a taxable event. In the case where people were still being productive, if the loan was not taxable, you will end up making more money overall, and it could end up being a taxable event. There's stuff floating around with the IRS. Munchin, I think, is saying that he's pushing to do something different. The IRS right now is saying that the expenses you paid with these proceeds are not deductible. And they're saying that because if the revenue, the loan proceeds, wasn't taxable, then the expenses aren't deductible. In the case where you didn't make any money on that person that wasn't working at all, then that would be a zero taxable event. In the case where I paid somebody and they were still producing revenue, that would end up making more taxable income for me. I'm under the impression that this is going to change and we're going to get more guidance from the IRS and from the government. So the answer to that is, I don't think it will be, but in certain situations, it could be. And I'm sure that doesn't make anybody feel any better, but that's the best I've got. The other thing, and Amy, I don't know that we have any questions. I don't know that there's a lot online yet, but one of the first things that happened through all of this, when I had people calling me and telling me they had to shut down, or clients were just very, very concerned because other places were shutting down before we shut down. They were worried about their business and the long-term financial stability of their business. So the next couple slides are some tips and advice that I gave clients that I think are sound. And frankly, we did that ourselves as a firm. And so there we go. Bill timely. Especially in construction or in a CPA world, and it's interesting, and it's easy for me to talk about the CPA world because I've lived this over for years and went right through this. We were in the middle of tax season where I've got some people working 80 hours a week, billing enormous amounts of time to clients, preparing tax returns and getting stuff out the door and charging them. And that's when we make our money during February, March, and the first half of April. And then April 16th shows up and half my team puts their feet up on the desk and they don't do anything for a month and a half. And as a firm, we lose money. They have to breathe. But what happened when they pushed the deadline out was we told everybody, we don't want you working 8 hours a week. We still need to take care of clients. We need to answer their questions. We need to help them with PPP. We still have a lot of tax returns to prepare and get out. And everybody did that. But what happened was because tax returns weren't getting finalized and issued, people decided not to bill. There's no reason why we shouldn't have progress billed them for the work we did to date. And that timely billing, not only for progress work or for what we've actually accomplished today, or let's say you're a contractor and you're out on a job, and when this all happened, the owner said, you know what, we're going to finish this, but right now I'm just not comfortable with your people being in my house or in my office, so let's shut this down until things clear up. If you didn't bill them through that date when they sent you home, then you're missing an opportunity to collect revenue. The other thing is, I lost my train of thought there, but it's really, really important to bill for whatever work's been completed, whether it's complete, or whether it's a progress bill. And you should always follow that advice, no matter whether we're in a COVID pandemic or not. But it's really, really important, especially when, like I told you, I'm worried about some of these doctors and dentists not being able to pay their bill down the road. And frankly, the more timely you bill somebody to the work you did for them, the more it means to them. I've got one partner at the firm who decides he'll bill for tax returns prepared in April in October. And the bills go to our clients, and the client said, why are you charging me $1,500 for a tax return? He says, well, that's what I did in April. They said, well, why didn't you bill me then? It's a lot easier to write that $1,500 check if we did the work last week than if we did it 6 months ago. So billing timely is probably the best advice I can give you. Send invoices, the work is completed, and the sooner they get the bills, better chance of getting paid. That's what I just said. And then follow up. One thing I found is, especially running our business, is we get so busy during our busy tax season that we don't communicate well with clients. We'll send bills out, and then when we all get a chance to breathe, later on we'll call and follow up with people who haven't paid us. Don't just rely on statements and emails, especially for older, aging accounts receivable. you know what, I give a networking presentation, and I talk about building a network and talking to people and building relationships, and emails are great and handwritten note cards are great, but I always grab the phone and especially for the young kids in the room, say, a telephone is that thing with the big spiral cord at the end, it hooks in two places. Pick that up and call people. If you pick up the phone and call somebody, especially if they respect you and they appreciate what you're doing for them, and say, hey, man, I really need you to look into this invoice that's 90 days old, you get a lot better chance of them paying it. And if you're not used to progress billing and you're going to progress bill somebody, call them and say, hey, you know what, especially with what's going on, I'm going to send you a bill for the work today, and here's what it is. If you tell them what the bill is before you send it, I always say, don't surprise bill somebody, especially if it's going to be more than what they thought. Call them and say, hey, we agreed to $1,000, it's $1,100, and here's why. You got a lot better chance of getting paid. And what happens if somebody gets a surprise bill is they don't even call you back. They don't respond, and they wait for you to call them, and they're even more mad. So yeah, pick up the phone and call them. And if you need to, especially in times like this, suggest setting up a payment plan. If somebody owes you $5,000 and you call them and they say, man, I'm struggling just like you are, say, well, could you send me $500 today and $1,000 by the end of the next month and $1,000 by the end of the next month? Getting $1,000 a month for the next 4 months is a heck of a lot better than them just ignoring the bill because they can't write you a $5,000 check. So suggest set up a payment plan. And, you know, working with them through this and remembering again that they're seeing all this through a different lens, and your clients, your owners, my clients, they're all facing different challenges. We have one group of business clients here that just killed it through all of this. And then we have this other group that couldn't work, the doctors and dentists. And then a lot of our contractors, it was half a dozen of one, six of another. Some were working, some weren't. I think the commercial guys were still killing it, and the residential guys were really seeing some shrinkage. So calling them, working with them, finding a way to help them through this will help preserve that relationship going forward. And then stop spending. Evaluate expenses, identify costs you can defer or eliminate, such as bonuses, travel, meals, entertainment. It was pretty easy when they said, hey, don't travel anywhere, to say, okay, no more non-essential travel. You know, and if necessary, be frugal with your airfare. Fly Southwest instead of American. Think Days Inn instead of going to the Ritz. I didn't say Motel 6 because at least Days Inn's a little better. And meals, do what's essential, but maybe you're not going to you know, Mastro's. Instead, you've got an important client dinner that you're going to have. Maybe you have it, you know, at I don't know, Steak 44. I don't think Steak 44 is as good as Mastro's. There you go. But it's a little bit cheaper. But look at every single thing you're spending. And we did that as a firm. We always have an after tax season trip. 1 year we go to Vegas, and next year we go somewhere for the family. And we went to Universal last year. Before we even knew that we weren't going to be able to travel, we canceled our after tax season trip and said we'll look at it down the road. That saved us a bunch of money. We always bring meals in during tax season. That way people don't have to leave in the evening because we can't usually get them to come back. If we feed them at night, we canceled meals right away. We've already made plans to scale back our Christmas party if we can even have one. We looked at every line item on our budget and decided what was important and what wasn't important. I will tell you that my advice is to not stop marketing and networking and business development. Everybody else is going to. And I believe that in a downturn in an economy, or I believe in a crisis, those people who still smartly spend money to keep their name out there, to keep their brand alive, will end up better in the end. But look at every single line item in your financials, everything you're spending money on, and defer bonuses if you need to. We did that as a firm. We told our admin crew get overtime, and they didn't get overtime during tax season. And we told them, I'm sorry, but this is one of the things we have to do to make sure that we're financially stable. Maybe we can make up for it later, maybe we can't. And I got to tell you that having the conversation, communicating with them, and we also told the rest of the team, we don't know when or if bonuses will be paid. At least they knew, and we were upfront and direct about it. And when I can pay them bonuses, they're going to be pleasantly surprised that we could. And if I couldn't, then I kind of warned them. But not saying anything doesn't do any good. And then one of the things that I think is really important, and I'm sure most of you, like us, we consider our team here a big family, and we love them all and we care about all of them. So it's really difficult sometimes for us to let people go, or to say somebody's job isn't really necessary anymore. But man, today is a great day to look at your people. Look for underperforming employees. I'm sure that everybody that's listening to this, even if it's 4 months from now, is going to know that they've got that one person that they should have fired more than once. And they haven't done it because, one, we were so busy we needed the body, or two, they've got a young family. You know what? Some days you have to make business decisions. And today, there's a lot of people looking for work. I'll give you a great example. It went back to that whole needs about the PPP. We weren't sure, but what I did see that happened as soon as all this started happening was all the big accounting firms either furloughed 20 to 30% of their people and or cut salaries by 20%. Over the past 15 years, since the economy's been good, I had to tell you, people coming into my profession have been asking for more and more and more money without even being proven. And we had to pay them because the market was so tight, we couldn't find good people. So the bigger firms just let people go. And we hired a new audit senior in the middle of this. His name is Zach. And Zach's going to be amazing. And one of my audit managers actually knew his manager at the firm that furloughed him. And when my manager called and asked her about him, she was pissed because they just cut him because he was just a number across the board. There was no rhyme or reason, just 20% of the people are gone. He was one of the best people they had. He's been amazing. He's been here for about a month and he's been amazing. Look for those. There's going to be people out there looking for jobs, and it's a good time to trade up. And consider combining roles. I think one of and I'm not sure anybody asked for my opinion, but my opinion is I believe that commercial real estate's going to be in trouble in 12 to 14 months. And the reason I believe that is because everybody just found out that you can do a lot working remotely and you don't need all this physical space. As a firm, we've been growing, and I was worried about our space. And what I found out over the past 4 months is that, guess what? I've got a lot of people that we can hotel, they can share a cube when they're in the office. And we've also found out that some of our admin team, we can combine some roles, and we might be able to eliminate some positions. And I'm hoping to find other things for them to do. But look at combining roles and find ways to cut those costs. Be sure to follow appropriate labor and employment laws. I think that you can't just say, well, I'm going to get rid of somebody because I don't like them. Make sure that you've documented any issues in their performance and documented it well. But make sure you do that. And if you have questions with that, I know people that you can talk to about how to go about that the right way. For instance, during all of this, we had a young kid that was working for us, and him and his girlfriend he called me and said him and his girlfriend both had all the signs of COVID. The doctor told him that they had COVID. He's sure of it, but he wouldn't test them because they hadn't been exposed. This was early on. We made sure he got tested. He was negative. Over the next week, his production was next to nothing, but he was telling me he was working. After some digging, we found out that he was charging us for 8 hours a day, billing clients for work that he wasn't doing, and we fired him. And there were several reasons why that was a little uneasy for me. One, he was a minority. Two, he just said he was sick from COVID. But the fact of the matter was we well documented everything that we needed to do, and he doesn't work for us anymore because he wasn't pulling his weight. And then manage cash flows. Accounts payable, you know what? And I'm just going to put pay bills as soon as you can. Putting off payments will only dig a deeper hole. I've seen so many time again when people get in a financial crunch, they say, I'll pay this next month, I'll pay this next month. Next thing you know, you've got so many things that you can't pay. Communicate with your creditors and negotiate payment terms or payment plan. Just the reverse of what I was saying about collecting from your customers. If you've got a big bill to somebody, say, hey, I'm just managing the cash flows over the next couple of months because of all this. Could you take $1,000 a month on the $5,000 bill? I'll make sure you get paid. If you communicate with them, they generally will accept it because they're in the same boat you are. Consider options carefully and do what makes sense for your business. I would hate to see somebody not pay a vendor or a subcontractor that you're going to need 6 months from now just because cash is tight. Timing, prioritize the timing of all cash outflows. So a great example is we have a 401k safe harbor contribution we make. It's 3% of people's salary, and we have until the filing of our tax return for 19's tax return to make that contribution, which in our case is October 15th. We can and probably will delay making that contribution until October, when we know where our cash position stands. It's normally paid about this time of year, and I think we're going to delay it 2 months just to make sure that we don't have a hiccup down the road with cash collections. And you know, rent and payroll. If you're the owner and you're on the payroll and cash a little bit tight and you don't really need the money, maybe you defer your payroll. We did that as owners of our firm for a little bit to make sure that we weren't draining the cash out. And especially if you own your own building and there's enough cash to pay the mortgage and the entity that owns the building, maybe you defer some rent. And then consider your options. Federal, state, local assistance available is what we talked about, the PPP. There's an EIDL, and I had a client ask me about the Main Street funding. I've got a banker looking into it for me. I'm not an expert on it, but there's other options. And then speak with your accountant and your business advisors to determine what best options are for your situation. And then just stay informed. Know your finances. See what comes in and out every single day. I get an email from our billing coordinator every day of how many bills were sent out and how much cash we collected. It helps me just have a good understanding of where we are in a cash position. And then it'll also help you determine whether you need to make adjustments. Part of that's going to be having good financial statements in-house, having good accounting that's up to date so that you're seeing what actually happened last week, this week, instead of waiting 3 months to find out, because if you wait 3 months to get good numbers, it's too late to make any of those changes. And the most important tip I can give you is project your cash flows. As soon as this all happened, I did it as a firm, projected cash flows out for the rest of the year, and said, this is what I expect to collect and what our cash flows are. It's one of the reasons why we canceled our after-tax season trip. There's a big chunk of change, and we weren't sure we were going to have the cash to do it. It doesn't take a lot of time. Just make some calls, and you know your business better than anybody. Say, well, I expect to collect this much, and here's my payroll, here's my rent, here's the other expenses. And when you do that, it'll help you identify where to cut costs. So when I did that for the firm, I actually took 2019's total year's numbers and figured out where we spent all of our money and did it month to month and figured out where we could cut costs. And you would be amazed of the fat that's in there that you can get rid of, at least for the time being. And you know, it'll give you a peace of mind. It'll help you make decisions, and you'll be able to make those decisions with confidence, knowing that, you know what, I know I've got to pay this, but it's going to be okay because I've got money coming in. Not just, hey, what's in the bank account today, and not sleeping at night over it. And then when I did ours, I did worst case scenario. I did worst case scenario. This is where we could be, and we operated and made decisions based on the worst case scenario. We're going to beat that, and everybody's going to be thankful for it. Not only the owners of the firm, but our staff, because we're going to be better than worst case scenario. I'll still have some money to pay some bonuses for all the hard work. Rather be optimistic or pessimistic and be better. We always say under promise and over deliver around here. And then this goes back to managing your workforce. Right people on the bus, are they in the right seats? And I talked about a lot of this already. Many companies took this aggressive approach, and I'm sure it's the same in your industry with contractors. I'm sure there's probably some really good people out there, and now's the time to look and hire them and either staff up for what you've got on the books when you did your cash flow production, or replace those that are underperforming. And one thing that I've recognized is during this crisis, your leadership will show. It'll have a lasting impact on retention. This has been, all this COVID nonsense has just weighed heavily on me. We have 50 people at the firm, and not a day goes by that I don't walk through the front door and remember that not only is the health and safety, but the financial security and long-term impact on my team is in my hands. And my leadership and the decisions we make are going to show that. one of the best pieces of advice I can give you on that is communicate and over communicate with your team about what you know, what you don't know, why you're acting in a certain way, and what you can do. It's going to make a difference in the long run. And then the last piece I want to touch on is fraud and preventing fraud. I've given this presentation. I believe Amy's seen it before, and I can talk for an hour or more about fraud. I'm very passionate about it. I've got some real life examples of fraud that's happened to contractors and other businesses. And I think there's some things you can do to prevent it. And if you're a small business and you're not doing some of these things, and when you get defrauded, I'm going to not say shame on you, but I might. Unfortunately, I believe that in a crisis, the criminal mind finds opportunities to because your focus is elsewhere. If you're especially struggling to keep people employed, you're worried about PPP, you're worried about if the government's going to forgive your loan. Oh, by the way, I forgot to mention, if the loan isn't forgiven, and I thought there was a slide in there, if the loan isn't forgiven, the repayment of that is going to be 5 years now instead of the 2 years, and it's a 1% interest rate. So even if you miss the mark a little bit, it's not the worst case scenario, but you've got to make good decisions based on that. So that goes back to the PPP. But so your focus is on making sure that we're sanitizing the office and people are wearing masks and looking for new good people to hire and managing cash flows and calling clients to get collected and finding out what you can do to save your business. And guess what? The fraudster knows that your focus is elsewhere, and that's when they'll do it. The criminal mind preys on those that aren't paying attention. It preys on those that are in a crisis and those on the weak. And I believe that actually over the next few months, a lot more frauds are going to be uncovered. So my advice to you is to look at the list I'm about to give you, the things you can do, and do what you can to prevent fraud. You got to pay attention and be aware. And what I mean by that is do not for a second let people think that you're not paying attention. For instance, I mentioned the young man that we ended up terminating, and I'll share this. Me and one of the other partners called him, and we terminated him on the phone. I told my wife it kind of felt like I was breaking up with a girl via text. It just didn't seem right. But what he found out and what the rest of the team found out was that we were paying attention. We were watching what was going on, and we were watching the hours. And I'll tell you right now, he was defrauding us. He was stealing time from us, and I was paying him to not work. So the next couple of minutes, and I know I'm running short on time, I'm just going to go through these 15 simple steps really quickly. When I do this as its own presentation, I have examples for each one of them of real frauds that have happened. And then I love the interaction with folks because they like to argue with me, and I always prove them wrong, that they should just do what I say and not argue with me. But so have the bank statements mailed to the owner's home. This is old, but I still leave it this way so I can explain it. Most people don't get bank statements in the mail anymore, but you get your statements electronically. And the owner of the business needs to review that. They need to actually look at it, see what's going in and out of the bank account. And if they don't know what something is, they need to ask the question. And just doing that and making it known that the owner's doing that will help prevent people from defrauding you. And if somebody is defrauding you, you'll catch it right away, and it won't become this mountain out of something very small. Never, ever, ever sign a blank check. I've had so many people say, oh yeah, I wrote a check because it's an emergency, especially contractors. Oh, I've got Bob and he's going on in the shop and he needs me to sign a check to Home Depot because he's got to get stuff and he doesn't know what it's going to be. Well, as soon as you sign a blank check, you've now subjected yourself to the risk of losing whatever amount of money is in your bank account. Accurate and timely financial statements, that's internal stuff, and external. Like if you have a CPA look at stuff, have them do it more often. But again, this is if you have timely financial statements and you're looking this week at what happened last week, or you're looking at the 10 days after the month end at what happened last month, you're going to see anomalies. You're going to see spikes in expenses. You're going to say, that doesn't make any sense. How do we have X in this expense account? And you'll find frauds faster. They won't become as big. And if people know, whoever's responsible for financials know that you're looking at it, it's a lot harder for them to hide stuff. Present all requests for payment to the signer of supporting documentation. If you have an accounting department that's preparing your checks, when they give it to you to sign, make sure that the actual invoice that you're paying is attached to it, and whether it's electronic or in paper, and make sure that's the amount that agrees. There's some great stories about when that doesn't happen, but that's how you'll be signing a check for something, but it's not really your expense. Ask a lot of questions and keep asking questions until you have an answer, until you understand and you're comfortable with it. Don't stop asking questions. They'll say, oh, I know what I'm doing. Okay, well, I don't, so could you please explain it to me? And then perform background checks. I believe you should perform background checks, not only on accounting personnel, but all of your people, criminal, and if they have any financial responsibility, a credit check. Because I will tell you, when I give this presentation, I believe people are inherently good, but then things happen in their lives and it makes them want to steal from you. Set up a fraud hotline. There's several free hotlines out there. If people know that they can call, there's a big percentage of frauds that are uncovered by anonymous tip, and that's a good way to prevent it. Just people knowing that you have a fraud hotline is enough sometimes to deter people from stealing from you. Lead by example. I can't understate that enough. Always do the right thing. If an employee sees you treating a customer or a vendor inappropriately or unethically, that gives them an excuse to steal from you. So lead by example, be above board, walk the walk. Mandatory vacations for anybody with accounting or financial responsibilities. And the key there is when they're gone, somebody else needs to do their job for them. There's a great story in another day I'd love to tell you, but I'm telling you that if you have a financial person and they're gone for a week and somebody else does their job, if there's a fraud going on, you're very likely to find it, because whatever the fraudster's doing to hide it won't be done by somebody who isn't privy to the fraud. A written fraud policy, every employee should be part of your handbook saying we don't tolerate fraud. If you defraud us, we're going to prosecute you. And everybody should sign that. Every part of the onboarding process, or if you have long-term employees, get a written fraud policy and have them sign it so they understand. Surprise inspections and observations. Walk up behind somebody and say, hey, how you doing today? I'd just like to watch you do your work. They're going to squirm at first because it's really uncomfortable, but if they squirm too much or they refuse to do their job while you're watching, then you might have a problem. That's a really good tool. And if you do that every once in a while, they never know when it's coming, and that'll also prevent people from doing stuff. Eliminate debit and credit card uses by employees. Never, ever, ever, ever give an employee a debit card. Again, you've now subjected yourself to whatever cash is in your bank account. And credit cards should only be used by employees if they need them. One way is to reimburse people for using their own personal credit card and only reimburse them for reasonable expenses. And if you have a credit card policy, it needs to be written and limit the available credit on any particular card to what's reasonable for an employee. So one of my admin crew here, if I were to give them, and I don't, but if I were to give them a credit card, it'd probably be $1,000 line, because if they need to go buy office supplies, $1,000 is enough. My audit manager, however, when he's paying for hotel rooms for 4 people for a week in Kingman, well, he might have a $5,000 or $10,000 credit line. But know whatever line you give them, you're at risk for that, because they can spend that and then just run off with it. Punish perpetrators of fraud. If somebody defrauds you, you need to absolutely call the police, file a police report. The thing I will tell you is, man, if somebody defrauds you, you'd sure hate it if it happened to somebody else. And I don't have enough time for that whole story, but there's a great story about that as well. And you can't publicly announce to all of your people that somebody was stealing from you, but I'm sure everybody can find a way to make sure that it's known that Bob stole from me, Bob no longer here, and I called the police without actually saying it. Again, if you have to, contact the labor attorney, but there's ways to do that to make it public without making it public. Segregation of duties, that means if somebody is responsible for billing customers, they shouldn't be the person responsible for recording the payment from the customer when it comes in. Another great story of real life fraud that happened there. But so if you have somebody who sends bills to customers, when the cash comes in, somebody else should record that as being collected. And then routinely review the QuickBooks audit trail. Most people use QuickBooks, and what the audit trail is in QuickBooks is you can open up QuickBooks and look at the audit trail, and it'll tell you every transaction that was ever recorded and then subsequently changed. And that's how fraudsters get away with it. You look at the financials, you had $1,000 expense in X account, and then you look at it, you approve it, then they go back and they change that to 2,000 because the other 1,000 went in their pocket. The one major fraud that was uncovered of a client of mine, there were like 30,000 different entries in that audit trail, and that just helped the prosecuting attorney just nail her to the wall because clearly she was doctoring the books. Where do we go from here? Remote working, we talked a little bit about that. Remote learning, we're doing that now. Amy and I were talking before we started how, man, this is weird for me. I love giving these presentations because I get interaction with the folks that are listening to me ramble on. I don't really get that now, but I think it's the new normal for the most part. So we got to make the best of it. And I do believe we're going to return stronger. I think that I tell people I'm 47, and this is the biggest thing that has ever happened in my life. I didn't live through Vietnam, and I think we all thought 9/11, when that happened, was the biggest thing that would happen in our lives. Boy, were we wrong. But man, we came stronger out of 9/11. We're going to come stronger out of this as a country, probably as a world. And so keep your head up and just make good decisions. And then where's your company heading? Have you looked at that? So that's what I have. And Amy, did anybody jump on and we get questions?
Yes, we had 12 attendees come through. As far as the questions are concerned, no, I think you did a great job. Thank you, Ross, for your information, for your knowledge, your insight. This was wildly important and extremely applicable to current events and future events. So we thank you so much for your time. I will be sending out a copy of this presentation to all of the participants that either registered or attended, along with all of Ross's contact information. Again, Ross's firm does all of the accounting for AWCI-AZ, some other associations here in town that are in construction. Very highly recommended. You might want him on your golf team, but not now. He did this thing with his shoulder, but when things come back, you'd want him on your golf team because somehow he always wins. We won't go down that road.
It's not me, it's Brandon. You've met Brandon. That's enough said.
Yeah, he always ends up with scratch golfers. We don't know how that happens. But anyway, thank you everyone for your time. Thank you for your effort again, Ross. I appreciate your time. We all do, and I look forward to the next one in the next few months, hopefully.
Thanks, guys. See you, Amy.
Thanks, guys. Have a good one. Bye-bye.